Good evening and welcome back to PreciseAlgorithmTrading.com. This is Dave and it is Tuesday, August 8th, 2023. We'll start right here with the S&P like we do a lot of nights, and it was a rocky day for the markets. Actually, a lot rockier than it closed. So the S&P was down 0.42%. The Dow was down 0.45%, 0.45. The Russell was down 0.59%, and the Nasdaq was down 0.79%. And you can see there's a huge amount of volatility. This is the hourly chart on the right-hand side, the daily in the middle, and the weekly on the left. And this is what the story is. I mean, there's a lot of back and forth. And I wanted to zoom out just a little bit on the hourly chart here and show you. This is that down day we had last week, I believe, and then we had a snapback rally that if you didn't bail on this down day last week and you had bullish positions that were still viable by our indicators down here, then you actually had a pretty good end of the week. And then I actually I think I've had some shorts on, and I added into some shorts, which are actually not shorts. I'm long the SQQQ and the SPXU, and they're counter index, so they go up when the market goes down. And you can see over here on the hourly chart, it's been a nice little rally of green with some pullback in the middle, obviously, on the way. But that's in an hourly position type of situation. So as long as everything stays good on the hourly basis, then as far as this is the green indicator, and all of this True Momo indicator is up. As long as all that stays good, then you can stay long, which is short the SQQQ, which is the inverse Nasdaq. I also do have stops in here just because it has been a blazing market, so I didn't want to take too much of a risk, so I've got them on. But as of right now, things are playing out fine. The S&P inverse is SPXU. There's more than these two inverse ETFs, but these are two ones that work for me. Similar situation here. Actually in an uptrend with higher highs and higher lows, a little bit cleaner than the other one. Well, let's flip back to the S&P. And really what I was getting at here is we had a move down and move back up. That's kind of 1, 2, 3, down, 4, 5, 6, 7 now. You could count this any ways you want, but we're getting extended to the downside on the hourly chart is kind of my point. So 1, 2, 3, 4, 5, 6, 7, and typically these moves happen in about 5. So, and even if you go to Elliott wave, they have a 1, 2, 3, 3 being the biggest, and the 4, 5 is like the ending of the wave. So I'm sure Elliott wave people might get crazy at the way I talk about this, but I don't really do all that. I just count the waves, and all I'm telling you is we're getting extended on these waves. And you can see a hammer or long tail showed up today. Let's zoom in on that. It's not really a long or hammer. It's more of a doji, and I think, and maybe a dragonfly doji. I forget what they call them, but anyway, long tail. That doesn't mean this move is over. It might mean that this move is due for a pause and a pullback up before we get lower move, or like I was talking yesterday, and actually the S&P looks a lot nastier than whatever I was looking at the other day when I had a nice big, oh, that was this one. Yeah, that's it. The big bullish candle typically will resolve to the upside, at least initially, and then go down. We didn't get that. We got a gap lower. So that doesn't, I guess what I'm saying is we could get a gap lower, and this can just continue lower. and probably this Trimomo indicator on the daily here, it is still above zero, and I think that's a tell. I could be wrong, but it's not. We're buried in the RSI zones down here in the green zone, and so I guess where I'm getting at is I think we are getting long in the tooth to the downside. We're probably going to get a reversal here soon, and it could be a nasty reversal back up because we've had such a powerful, strong market lately. So we'll stay tuned, but that could be good for bulls and longer term positions. All right. Dow Jones Industrials, similar with a lot of recent back and forth volatility. I still don't think the volatility is high by any stretch of the imagination, so let's do a little quick thing once we get done with the indexes here. Yeah, here's another. All the indexes have a tail. I don't know how the NASDAQ looks. I haven't looked at these yet, but that's something I do this right along with you guys. So you're seeing it the way I'm seeing it. I'm doing my homework. And we're getting a little bit of bullishness here on the NASDAQ with that candle turning green. We had that happen and then it failed, but we had it happen looks like twice. So that's not the be all end all. It's just an indication. Oh, and let's look at also oil on the actual spot price for futures, and that thing's got a long tail. So this almost looks like a head fake to me because all these things have tails. When everything has a tail, everyone's going to see it, and anybody that likes and plays hammers and those types of candlesticks will just get drug underwater, I think. But so this looks like a big head fake to me, at least for the short term. Although we do have on the oil market here, we do have green over here, green over here, green over here, green. We're still technically green here, even though we've got some uh, not negative momentum coming in here, but some weakening of momentum. And then we do have a squeeze that's fired long on the weekly, on the weekly Trumomo. So I'm still really expecting. I don't know. I'm expecting a better entry, and maybe I won't get it. Oil, the ETF, exchange traded fund, is similar. So I might need to just hold my breath, but as soon as I do that, this thing's going to roll over and at least come back to zero, and then we'll get a move down into this gold Harvard line, or even in between the gold and the light blue line, which would be a great place to pick up a position because then your risk is only down if it closes below the light blue line, and I don't think it will. That's just my. Well, it might actually. This could be the first salvo into this for a long time into coming up above the Harvard lines, and it could fail, and then the second one would be a lot stronger move if that's the case. At least that's my experience. Alright, so what I wanted to show you over here is this thing because I think it's handy. We are up at the third average true range on oil, but let's look at the S&P. SPX. We are in the area of the mean and actually one average true range lower. So this could be a place we get a bounce, or we could come down a little harder and, like I say, take a bunch of people back to the woodshed and let them bail out of their positions before this thing goes higher. Yeah, so that's where we're at. I think this is a clean looking way of looking at a chart. If we look at the let's look at the NASDAQ. I'm going to put it back down there just because it's cleaner this way. So here's the NASDAQ. Yeah, so we're in a situation where we really need some sideways action for a while, and some back and fill, and possibly um, really a scoop looking pattern that could show up. And what I mean by that, I'm going to pull that back up again. I don't have enough bars out here to the right, but I'm going to flip this up here and draw. So this is the high, and if this is the low, which I don't know that it is, we'll see once we get two candles to the side. That would be a pivot, like that, like that. So these are pivots. They're defined by a low candle flanked by two higher candles on that side and two higher candles on that side. That makes that a definite pivot. Technically, this is a definite pivot. Pivot, pivot, pivot. So what we're looking for is just a pivot. And then if it is, this is the high, and if this is the low, then we kind of do this, and we expect a move to come up more like that, and possibly even come down, come up, do one of these, and get. So this is that area when it dips back is kind of your place to get in. You can actually get in here, you can get in here, get in here, and that way you can buy in as it's coming back against you, and you actually get better fills. So again, that's how I trade. It's not necessarily recommending how you do it. Do your own homework. That's what I've done for years, and come up with a game plan. And I also know when to get out. All right. So all that being said, that's how the markets are looking. TLT took a big pop today off the relative bottom lately. This is certainly not a place I would buy. So, you could buy and just bring it up until it gets back to the mean, but that is a dangerous counter move kind of a trade. And the mean in that position is going to be here or here on the hourly. So, there you go. Flip over to stockcharts.com. Let's look at the bullish percent indexes, which I believe have taken quite a move. So here's the industrials, and we're down 4.55%. Tacked on two new O's today. The NYA down 2.1%. We have to go down 1.26% to tack on a new column of O's. We went down 2.1%, and we are at 61.25. We got to breach 60, and if we do that, we'll attack on these O's. That's called a 3-box reversal. If you actually zoom down here, this is the settings for this thing, and it's the way it comes in. This is where it says user defined 3, box size 2. This all comes in standard. I've found no reason to change it. So that was the NASDAQ, I believe. The SPX tacked on a new O, down 3.08%. The OEX, which is the S&P 100, tacked on a new O, down 1.49%. Still on a point and figure buy signal. I want to make sure everybody sees that. The recent column of X's has exceeded the previous column of X's to the upside, and we don't have a recent column of O's that's exceeded the previous column of O's to the downside. So the point and figure buy signal is the one that's in play, even though we're on a kind of weakening move with the column of O's. And then that was the OEX. Let's look at the NDX, which I talked about this last night, and this is a newly formed point and figure sell signal. Now we're down into the range of this potential support area, which is this. That's a bullish support area. I forget what they call it, diagonal support, but anyways, now we've gone for the NDX, which is the NASDAQ 100, down 7.14%, and we're tacked on the two new O's, which, again, this column of O's has exceeded the previous column of O's, regardless of the fact that the previous column of X's exceeded its previous column of X's. The new column of O's is the one that's the driver right now. It just tells you where the risk is. The risk is to the downside more than it is to the upside here. I can make a case that say that the risk is when you're on a column of O's is to the downside. Once it flips over back to X's, then your risk is really to the upside. And the risk can be also the reward. I mean, that you just want to. That's what we're trying to do here, is position ourselves properly. And finally, the automatic trading systems that gave us some nice numbers yesterday and took a little bit back today. This is the Dow futures, and you can see this little hiccup right there. And I went ahead and printed the trades for today. This is the 8th. There's two of them. We had a couple of losers at the end of the day yesterday, and we made up a little bit today on the Dow. The NASDAQ, or I'm sorry, the Russell here, that's RTY, didn't trade. This is the same as it was yesterday, so I didn't print off the trades for the day. This is the NASDAQ, and we took a little haircut today, which the last couple days have been pretty good, so a haircut's expected. And this is where I was talking, the last day or two was pretty good, but then I wish it would stop flipping. And this is all the 8th. So one winning trade inside of a bunch of losers. And at the end of the day, I want to make sure everybody gets this. We're looking for higher highs and higher lows, and we're wanting an uptrending. I mean, I'd love it if this thing straight went up. It's just not realistic. These have to happen. These have to happen. We try to find ways to make them gentler. This one's rough, but we're trying to get it to go back up like that. So at the end of the day, we're looking for an uptrending, upsloping equity curve. Our equity needs to go up. And if you look at my yearly or even 15 months versions of this, it's a really pretty great system. So, if I may say so myself. And that's what I got for you guys for tonight. Take care, good trading, and have a great evening.